not taking up the majority of the candle like this one. There is a lot of volume here, and that's going to be a pretty good indication that price wants to run higher. So if we go right here, right, what are we looking at? Very bullish candle. Very bullish candle. Look at how much of this candle is made up of the body. You can clearly see it's very bullish. Look at how much of this candle is made up of the body. You can clearly see it is very bearish. But that's not going to be the only indicator you can use to determine if price wants to go up or down. We're going to teach you more in depth other things that you're going to combine to really put together those narratives. But I mean, just look at this, right? Bullish structure, strong bullish candles. What starts happening up here? Oh, more wicks. It starts dying out. And then we get that big bearish candle. And then we get more bearish candle. And then look at the candles also before price reverses. Look at this, right? Price is dumping. Lots of power, lots of power. What happens here? Dojis, okay? Not to say that every time you see a doji, price will reverse, but it's still something for you to look out to because you can see that the pressure is dying. You can see that there is less volume in the market right now as sells are stopping. And so you get these dojis, and then what happens? Buying power increases, bullish candles start. And yeah, guys, really spend some time just analyzing price. Like, screen time is the most important time in trading when you're first starting out. You got to be schizophrenic about it. You got to be crazy. You really just got to spend time in the charts, become one with them. And yeah, let's talk about something a little bit cooler now.
So this is your open, high, low close and your open, low, high close. It looks very intimidating, but I promise you guys, it is not. This is what a bearish candle looks like, a red candle. This red candle here represents price has opened here. It has traded higher, and then it trades lower, and it closes here.
So now just to implement some time increments. So let's say from 1:50 to 2 p.m. price is just sort of trading sideways, and at 2 p.m. you know, we trade up. So this move right here is gonna be from 2 p.m. to 2:50 p.m. and so we just start dumping from 2 to 2:50, and at 2:50 to 3 p.m. 3 p.m. we close down here, right? So nothing to overcomplicate here, but this is just gonna end up being a bearish candle. So you understand, right? Let's say you were looking at the charts at 150, and then by 2:50 you see that we're trading down here. You're probably going to see a big red bearish candle for the 2 p.m. candle.
You're not probably, you're going to see. If it opens there and it closes there, you're going to see.
Yeah, you're going to see whatever. Fuck you, Blake.
So in simple terms, guys, the open, high, low, close. What does this all represent? This is your opening price. For a bearish candle, we're going to have an open at the high. And it goes higher, meaning this is the extreme of price. This is the highest point in which price traded to, but it's not going to close there, right? We then trade lower. And then this is the lowest point that price traded to, but it didn't close there. We then trade higher to close price. For a bearish candle, we're going to have an open at the high. And it goes higher, meaning this is the extreme of price. This is the highest point in which price traded to, but it's not going to close there, right? We then trade lower. And then this is the lowest point that price traded to, but it didn't close there. We then trade higher to close this candle. And this is a bearish candle because we close below the opening price versus a bullish candle. This is a bullish candle because we close above the opening price, right? In a bullish candle, in a green scenario, in a green candle, we have an open at the bottom. We then have a low that is formed, and this is the lowest point in which price has traded to. And then we have a high, and then we have a close. And because this close happened above the opening price, this is a green candle. So just remember that. If the candle closes below opening price, then it's going to be a red candle. Dance for me while I do this, Pat. Okay, you can sit down.
Okay, yeah, I'll stop.
Perfect. So this doji candle is going to show a lot of consolidation because price didn't really move a lot here. As you can see here, this is the open, right? Just like we talked about. This is the low. So this is the extreme, the lowest that price has gone in this 15-minute candle range. And then this is the high. This is the highest point that price has gone in this 15-minute candle range from 12:15. right? And if we go down to the lower time frame, like the 1 minute time frame, so from 12:15 all the way to 12:30, this shows the 15 minutes worth of price action. So this doji candle is not going to show a lot of price movement, right? It's going to show a lot of accumulation. For example, here, the opening price and the closing price is very close together. As you can see here with the opening price here, we traded higher, and this is the extreme point. This is going to be the wick. And since price traded below the opening price and closed below the opening price, right? This was 12:15 and then it closed at 12:30. And since it closed below the opening price, it is going to be a bearish candle.
As you can see though, at the beginning of this 15-minute chart, we did trade lower and then we traded higher, and so we made these extreme highs and this extreme low, and then price died out and started closing near the middle with low volume, but it still ended up closing below that opening price, which means it's going to be a bearish doji. It's hard to notice really because it is a micro sort of close there, but nonetheless it is still a doji. Now something that's going to be easier to spot is going to be like the candle right after. So here we have the doji. What happens right after? Boom, we got that reversal. This is a strong bearish candle on the 15-minute chart, and we're now going to mark this the same way so you can see what this looks like on the 1 minute.
So this is the 15-minute time frame, right? It shows price from 12:30 all the way to 12:45. So we can see here on the 1 minute time frame, price has opened, and this is the highest point that prices went in the 15 minutes of this price action. And this is the lowest point that prices went in this 15 minutes of price action. And since price closed below the opening price at 12:45, then it's going to be a bearish candle. Now, let's get into a bullish example. So this is a bullish candle on the 15-minute time frame. As you can see here, prices open, we then created the extreme low, we then created the extreme wick, and we closed above the opening price, meaning it's going to be a bullish candle. And we can see here on the lower time frame, this is what happened. We opened, we traded lower, and we created the extreme. This is the lowest point that prices went at from 1:45 to 2 a.m. And then we created the extreme high. This is the highest point that prices went. We didn't close there, right? But price reached that level. And since we closed above the opening price, this is going to be a green candle.
All right, guys, so that concludes our ICT for Dummies episode 1, where we teach you how to make money. Of you everywhere. Anyways, guys, here is our little outro with the illustrations. Make sure you know this. Make sure it's engraved in your brain. Make sure you understand it more importantly and not just memorize it. And the way to do that is by practicing and actually looking at the charts and looking out for all of these different types of candles. There's not that many. There's not a lot you need to know, right? We're keeping it simple and straightforward with you guys. But yeah, once again, thank you for watching our first episode. This was on candlesticks. We're going to be posting a psychology video right after this. Psychology is equally as important, if not more important, than actually understanding the technicals. So please make sure you watch that video.
Honey, pepper, pimento, pineapple, dragon fruit. They're back. They're so back.
This may be the last ad you ever see. Because with the free ad block extension...
What's up, guys? Welcome to episode 2 of ICT for Dummies. This is going to be a psychology episode. Please watch this video all the way through. It's really important. The topic for today is going to be surrender your ego. If you think that you don't need to watch this video because you're better or smarter than other people, I'll have you know that psychology is one of the most important things on the planet, and you are no better than anyone else watching this video. You guys want to become better traders and better people, so watch this shit all the way through. Don't think that you're at an advantage when you start something. Everyone starts off with not knowing anything, and everyone needs to put their head down, lock in if they want to learn something. Don't think that there's shortcuts to things in life. Don't think that not trying is cool. People who give a fuck, actually care to learn, and enjoy the process are those who see results. I've heard it from people before, like, hey, can you teach me how to trade? I bet you I can learn faster than other people. I can learn in 2 weeks. It doesn't seem hard at all. I learn other things fast. Like, you're not special when it comes to trading. I'm gonna tell you straight up. Psychology is undeniably one of the most important factors, if not the most important factor of all of trading. But you cannot have a good psychology if you don't work day in and day out on and off the charts to make yourself a better person.
Guys, to make any sort of progression in your life, you must surrender your ego. You cannot do the same thing every single day and then magically expect different results. Guys, I want you to know that we've been in your exact shoes. And when I'm gonna be telling you guys, we're gonna give you homework, right? For example, we're gonna tell you soon to start backtesting. We're gonna tell you soon to start journaling. And we're gonna tell you these things because we've been there, because we know that these are the steps that we need to be taken to become profitable. You need to completely be vulnerable with yourself and let us help you.
We've seen it a million times before where someone will pass their first account, start making money, and the second they see a bit of results, they stop practicing all the fucking good habits they had when they actually wanted it. You gotta remember that feeling 24/7. You gotta put your head down and treat it just like when you started, even when you're making money. Like I've said, we've seen it so many times. They'll get their first payout, they'll stop journaling, they'll stop doing the technical analysis they need to. They'll start waking up 1 minute before market opens and think that they know everything and that they can take trades half awake. Listen, everyone has a different journey, everyone has different timing, but everyone who sees success does the same thing. They put their head down every single day and they treat it like it's the first.
And again, guys, you need to be taking accountability for every single thing that happens. You cannot blame it on the market. You cannot blame it on any other factor other than yourself, because at the end of the day, you are the person that is pushing the button. You are the person that is making the same mistakes over and over again. And again, you are not going to see any sort of progression if you're just making the same mistakes and you're not writing it down. You're not journaling them. The better you understand your emotions, the better you're going to be able to manage them.
Become in tune with yourself. Talk with yourself. Journal in the morning how you feel before you trade. Make sure you're level-headed. After you trade, journal the trade. These are good habits you need to practice every day. Make your fucking bed. Do the little things. Build that discipline. Become an actual good person, and it's going to equate to you being a good trader.
When you start trading, you are going to be taking bad trades. It's inevitable. It's going to happen. But what you have to do after taking those bad trades is journal it. You have to write down your confluences. You write down your emotions. How are you feeling before your trade? How are you feeling after your trade? And that is how you are going to progress the fastest. The people that don't progress are the people that make those mistakes, and then, they forget about it. They don't journal it. They don't do anything. How the fuck do you think you're going to see any sort of progress if you're not journaling? If you're not surrendering your ego? If you're not being vulnerable with yourself?
And then there's people who make progress and then take 100 steps backwards because they got comfortable. Don't become comfortable. Listen, you guys are all watching this video because you share the same purpose. You want to become profitable. You want to live out your dream life. And I'll have you know that the market does not give a fuck about you. It doesn't care if you got straight A's in high school. It doesn't care if you've gotten all the girls in the world. It doesn't give a fuck if you're the biggest person at the gym. You're still not a good trader until you can put your head down like the rest of everyone else who has seen success in the markets. And to save you some time in your journey to profitability, if you don't want to take this seriously and you think you're the shit, just wait till one day you get so sick of breaking your rules because you couldn't practice any good habits that you're either going to quit or you're going to have to actually start giving a fuck and learning everything that you need to. There are no shortcuts in life. Surrender your ego, guys.
We have got to the point where literally anybody can build a fully working app without knowing how to code. This is base for.
What is going on, guys? Welcome to episode 3 of ICT for Dummies. We just did candlesticks and now we're on to market structure.
And now we're going to help you interpret these candles so you can actually understand the trend of the market.
So as you can see, you have two different types of market structure. On the left side, you have the bullish market structure. On the right side, you have the bearish market structure. What does bullish market structure look like? Well, it starts with a low and then a high and then a higher low and then a higher high and then a higher low.
What would be that? Low. High. So it'd be low, high, high, low. So I'm thinking it would be that. So this is low, high, 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 low, high. So it'd be something like this would be low, higher, low, higher, and then it needs another high, so low, higher, and then it needs another low, then higher. Low, higher, no. Low, higher, then it's coming. higher, low, higher, low. We need another higher. Low, higher, and it needs to be low again. Low, higher, higher. Low, higher, low, higher, higher, higher. Seems like it. I don't know if I'm seeing the low, higher, higher. Cause I'm looking from what he's saying. Low, high, higher, low, higher, low, and then sky. So low, but it isn't very high. But it does come up to the height of this one. So low, higher, lower, lower, higher, lower, 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 higher, higher, low, higher, low, high. Well, was it Danglish? What was that shit called? Dongo? Dongo? Dingo? I forget what these are called. These are like when the market's recessing. Or, not when it's recessing. Inconsistent, I would say. Because like a lot of these happen and they're just so small. Like the market's reversing. That's what it looks like. Because look, it goes, it has a bullish and a bullish right here. It goes farther down, then shoots up, and it goes down, down, up. I gotta relearn what that is, so we're gonna go back probably. I'm okay. Um, I don't know. Maybe I should look at the 1 minute. All right. Mm. We need high, low, high, low. Low, high, low, and then we need a high. It has to be like a continuous cycle, I would assume, unless they're gonna show. I'm gonna try to look for one, but I don't know. Because low, high, and then there should be a low going down here, and then high. I think we can find this. Gonna do NQ most likely. And then what do I go about? I forgot what he told me to do. Hold on. Okay. Um. I don't know what NQES means. we're just gonna today. Well, today is not Tuesday. Did these matter? No, I'm gonna say the initial D. No, no. Today. Let's go the 6th. No. Okay. The end date should be later than the start date. And I'm trying to make it the 6th. Did I do something wrong? I think. Hopefully that's right. Okay. I just want to look at these sticks. Doge, doge. Shoots, shoots. Low. High. Higher, low. Higher, low. Reversal. Oh. Mm, mm, mm. These simulations are so small. Like I didn't even see the movement of them. Oh shit. Wait, no, this is the same thing we saw. How do I? Oh, okay. So I can enable have it already ended. I didn't even get to watch it. Okay, that's okay. We'll come back. We'll figure this out when we start back testing. I did want to look for what they were saying here, but I see what they're saying. It's gonna go low, higher, well, low, high, higher, low, higher, high, higher, low, and then shoot. Um, not enjoying it. Doesn't even fucking matter. Pro. Jeez. Oh no, okay. Alright. Let's go back to watching.
And then higher high, continue, continue, continue. As for the bearish market structure, you're gonna have the opposite. You're gonna have a high, you're gonna have a low, you're gonna have a lower high, and then a lower low, a lower high, and then
So bearish is high, low, lower high, lower, and then lower high.
a lower low.
Okay, so now this is what it looks like on an actual candlestick chart. So we have a low, then we have a high, then we have that higher low, then we have the higher high, higher low, higher high. Guys, it's gonna be like really.
So it's skipping. So the low, high. This would be the higher low, right? What would be this one? This is the low, or either one is low, higher high, higher low, higher, higher low, higher, and then higher low, and then a higher.
simple, and I know you do not want to be learning this right now, but I promise you it is going to help you in the long run, okay? I know we're going to get into models later, we're going to get into fair value gaps, you know, liquidity sweeps, all that stuff, but you need to know the basics to incorporate everything that we're going to learn in the future. And then for the bear structure, it's the same thing on the candlestick chart, guys. So we have a high put in place, then we have a low, then we have a lower high, then we have a lower low, lower high, lower low, lower high, lower low, and this shows.
Hold on, I was on my phone. Let me chill.
Then we have a lower high, then we have a lower low, lower high, low. Same thing on the candlestick chart, guys. So we have a high put in place, then we have a low, then we have a lower high, then we have a lower low.
High and then a lower low. And then I guess it to be high or high, then lower low, and then high, and then even lower low right here, I think.
Lower high, lower low, lower high, lower low, and this shows bearish market structure.
Is
And this
he
shows
going based off these top wicks? So like high, low, higher low, low, lower, high, and then low, then lower low, and then low.
a bearish trend in the market.
Now we're going to show you some real-time examples so you can have a better understanding of this.
Okay, so we're gonna play this out in real time. You have your low, right? You have then your high that gets put in place. Your high. Higher low market structure, and this shows a bearish trend in the market.
Now we're going to show you some real-time examples so you can have a better understanding of this.
Okay, so we're gonna play this out in real time. You have your low, right? You have
So this was the low.
then your high that
Higher low.
gets put in
Now we need a high.
place. Your higher low.
Your higher.
You
Then
have
your higher
your
low,
higher
low.
high, your higher low, your higher low.
Higher lows right here, see? Because our highest low is right here. Then we shot up to our high. Highest low right here. Higher low. Higher low. And then shoot again.
Low, your higher high, then you have a low, and then we have our little liquidity
Liquidity sweep. Okay, so this would have been the high. Okay.
sweep. We'll get into that later. Then your low gets put in place, your higher low, and then your high. Okay, you got it.
And although we are not trend line trading and that's not what we will be teaching you, it is still incredibly important for you to understand the foundational movement of price action.
And guys, it's a little bit cringe, but the trend is your friend. At the end of the day, higher time frame is always going to hold higher power. So I oftentimes see a lot of people just fading the overall trend. We're at all-time highs right now. Stop trying to catch the top and short this, right? We're clearly in bullish market structure. So catch those longs and you will get the best possible risk to reward. You're going to get the best entries. And obviously we're going to get those entries using our models that we're going to teach later on. But this is, again, the foundation that is necessary here.
All right, guys, little quiz time. Let's see if you can identify the trend here.
Bearish or bullish? Where? This? I don't know what is low. Is blue low? Fuck, I forgot what was low for these.
Guys, little quiz time. Let's see if you can identify the trend here.
This is an all-time low. High, 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 low, high, low, high, low, low, high, 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 low, high, low, low, high, high, low, low, high, low, high, 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 low, low, high. Bearish. It keeps going down. Like it minorly goes up and it goes down.
Bearish! Why is it bearish now? Let's do a little mark out while Patty dances for me.
That was correct. So it did go high, and then it shot low, then a lower high, which I just said high, but a lower high, and then this once again lower high, lower low. So yeah, so it goes high, then low, and then a lower high, and then once again, I don't know if these are good, like bearish. I don't know if these are like profit, like going up or going down, because it's kind of hard. Because red and green, it's easy to differentiate, but blue and white, I don't know which one is, green or red. So well,
So as you can see here, we made the high, the low, the lower high, the lower low. If you didn't mark this out correctly, you might want to reconsider trading, and you might want to just, no, I'm just kidding. And then your lower high, exactly, like this is not going to be perfect too, guys. I want you to know also, in a market, it's not going to look perfectly just like this, how we draw it out, right? It's most likely going to look something more like this, where we'll do something like this. Like, this is the reality of how the market is actually going to be moving. So spend some time on the charts, identifying trends, marking out your lows, your highs, your lower lows, your higher highs.
How
Guys,
do they
also,
make these
if you
words?
want to, looking at this on a line chart makes it also a lot easier. If you look at the low, you have your higher low.
How do they mark that out? Like, no. Oh, no, no, no. Let's go. Let's just say this is low. How do I mark this? This is the low. Right there. Highest. Oh shoot, I gotta go back in the book. Okay. Be right there. Boom. Okay, so if we were to buy entry about maybe like right here or right here. Up, low, low, low. Up, low, up, low. Very good high here. But is it gonna hit my other one? I don't know. I don't know if there's a high demand to get that high again. But let's see. It just drops down. So maybe this is a closure, because I feel like this is definitely bearish. Yeah, it's definitely bearish because it was excelling at first. Uh, or high, 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 up, up. This is the highest wick. This one is. Alright, bang. And then what's the lowest we've seen? Probably down here, which I feel like I wasn't crazy. But it's not far off from this initial line I made. So it's not far off from the initial line I made. And then it just kept dropping. It just declined and declined and declined, and then just market closed out.
Right? And you can identify trends simply using the line chart if you can't understand it with candlesticks yet.
Look how easy it is to spot trends, guys. Bullish. Bearish.
Hold on. Okay.
Simply using the line chart if you can't understand it with candlesticks yet.
Look how easy it is to spot trends, guys. Bullish. Bearish.
Can I reset this? Can I get rid of you? Okay, so I can hide them. That's nice. Okay. Okay. Bang. Bullish. Right?
Using the line chart if you can't understand it with candlesticks yet.
Look how easy it is to spot trends, guys. Bullish.
Bullish is bullish. So it starts down and then comes up. This would be a bullish. I think, cause look, comes all the way down, up, 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 down, up, up. Let's see, and then drops all the way back down. It would be bearish. See, let's go like right there. That's a pretty far line, no lie. Down, down, up, down, up, down, up, down, down, up, down, up, down, down, up, up. That's actually pretty good. Down, and then Doge. I'm saying Doge or something. And then up, down, down. It's in bearish. And then this is definitely a bearish. Oh, this is definitely a high. Look at this. This is high. This is. If that one's a bearish, this is bullish. Bullish? Bullish? It's definitely bullish. This is definitely bullish too. Look at that. Let's go. Yeah, this is bullish. Bang. Like from here to like here. Bang. Bullish. Just kept going up. Then kept going up. Connect this one to this one. Bang. Oh shoot. Bang. Look at that. Holy. And then this would be bearish because look how crazy that dropped. But then it started to come back up. Bang. Holy shit. Crazy bearish. Damn. But crazy up. Wait, no. Get rid of that. Look. All the way up here. And then crazy bearish down. And then crazy bullish back up. And no key. I feel like we could have kept it there. It's okay. Cause up, down, up. Down. Right here. Bearish. And then it's starting to rise again. All the way back up here. And then it's all-time high. Well, it's technically going down. And it went down right here. And then skyrocketed all the way up here. And then skyrocketed all the way back down. Then went back up. So right here. Oh shit, no, get rid of this one. And then it kind of kept going up. So like, right here. But it just started to go a downtrend. Okay, let's go back.
Bearish. Bearish. Bullish. I'll identify the trends for breakfast.
We got, just to reiterate this, like, the trend is your friend. For example, when you're swimming, right? You want to be swimming with the current if you're in a little river, right? You're swimming with the current. It's really easy. You're just swimming. You don't even have to put much effort into it. Versus if you're swimming against the current, what is going to happen? It's going to be a lot harder to push through that, right? And it's, you know, you're going to hit stop loss. Oh my gosh, hit stop loss, bro.
That wasn't on purpose.
No. You're probably going to drown, okay?
Of course, if you're hyper fixating on the lower time frame right now, it doesn't take a big brain to realize that the lower time frame is currently in a bearish trend. But if you focus too much on the lower time frame and distract yourself from what's actually happening on the higher time frame, which is clearly a bullish trend, then that's where you'll most likely find yourself getting manipulated out of trades and stopped out. So in a scenario like this where we analyze that there is clearly bearish structure on the lower time frame, but there is bullish structure on the higher time frame, we want to wait for bullish structure to form on the lower time frame. Maybe something like, and we're going to get a little bit complex here, but if we came down, little liquidity sweep, and then started seeing some bullish structure.
I have this marked out. I know I'm not crazy. I have that marked out somewhere. Like, so their chart went up. It's kind of hard to see, but where is it? I have it marked out. I feel like this was the little liquidity sweep he's talking about, because it just dropped completely down and then soared back up.
Structure form, and we can catch.
Well, it didn't go like that. Well, it kind of did. It went all the way down, then down, up, down, up, down, up, down, up.
Some longs from there. So the whole point of ICT concepts really is it allows you to understand the higher time frame narrative and then use the lower time frame to find the most optimal entry points.
Okay, so now we're going to get into the market structure. Drum roll. Shift.
Wow.
Shift in the market. So a market structure shift indicates a change in trend. So it is shifting from either bullish structure to bearish structure.
Hold on. Holy.
Or bearish structure to bullish structure.
Bullish structure to bearish structure.
Okay, and here on the left, we have bullish market structure, right? We have our low, we have our high, we have our higher low, right? We just learned this. When we get a shift in structure is when we break through the last higher low, okay? So once we break through this higher low that we have and we get a closure below this, this can indicate a change in trend, and then we start seeing bearish structure form here, right? We then have our lower high, our lower low, lower high, lower low. And
Domain expansion, market structure shift.
this market structure shift can then happen back again to the upside. How? by closing above the previous lower high, right? So a bullish market structure shift looks something like this, where we close above the previous lower high, and then we keep trending upwards. Versus a bearish market structure shift, we're closing below the recent higher low. All right, so now we're gonna show you what a market structure shift looks like on the actual charts, okay? You can see here, we're in bearish structure, right? I don't have to explain this, we just learned this. And then, once we get a closure above this recent swing high that we made, this is a market structure shift, okay? This is going to indicate that price is reversing and we are going to put in bullish structure. And it has to be a candle closure, okay? I see a lot of times people getting faked out thinking market structure shifts can happen just when the candle, goes over this. Wait for the candle to close. It has to be the body closing above. It cannot be a wick, okay? If it's a wick, that is not a market structure shift. It's not a true market structure shift.
And as we get deeper into concepts and a little more complex, you'll realize that the bodies and wicks make a huge difference. As you can see here, the body failed to close below this last low, ended up wicking this low. That's a liquidity sweep, but we'll get into that later. Now, if we look at this price action, what does this look like? Bullish market structure, right? We have a sequence of higher highs followed by higher lows with every swing. Now, what happens? We break through this low, we get a bearish market structure shift. And once we get a body closure below this low, you can see that the trend has now flipped to bearish and we get bearish market structure. All right, guys, now we're gonna show you the importance of body closures in real time. Clearly here, you can see that we have bullish market structure, right? Price is trending upwards. We get higher highs with every swing and higher lows. And what happens now? Price starts coming down. You think it's going to break through that low, but no, there's a zero body closure below this low. You end up wicking this low, and what happens? Price continues higher, right? So this is a fake out. This is not an actual market structure shift. And this is why it is so important to understand that in order for a market structure shift to occur, you need now. Price starts coming down. You think it's going to break through that low, but no, there's a zero body closure below this low. You end up wicking this low, and what happens? Price continues higher, right? So this is a fake out. This is not an actual market structure shift. And this is why it is so important to understand that in order for a market structure shift to occur, you need a body closure.
All right, and as you can see here, we are clearly in bearish market structure. So what would a bullish market structure shift look like in this scenario? Well, it will be a closure above the recent lower high. So if we play out price here, we do not get a closure above the recent high. This is not a market structure shift. Why? Because we did not have a body. So this is a fake market structure shift, right? A true market structure shift needs a body closure, okay? And then as you can see, we continue with bearish structure. Okay, so in this example, we have bullish structure, right? And you wait for now a body closing below this low. Is this a market structure shift, guys?
No, I don't think so. Wait. Hold on. Isn't that when the market... It should be a body at the end, right? I'm gonna say no, but I want to be confident in the answer no. Structures.
The bearish, and we get bearish market structure. Every swing. Now, what happens? We break through this low, we get a bearish
So it goes through this low of the wick.
market structure shift. And once we get a body closure below, this is not an actual market structure shift. And this is why it is
And this was a fake out because the body didn't go through it. It was just a wick, right?
price is trending upwards. We get high
Wait,
and higher lows. And body closure below this low. You end up wicking this low. And what happens? Price continues higher, right? So this is a structure shift to occur. You need
Structure shift look like in this scenario? Well, it will be a closure above the recent lower high. So if we play out price here,
were you saying lower?
we do not get a closure above the recent high. This is not a market structure shift. Why? Because we did not have a body. So this is a fake market structure shift, right? A true market structure shift needs a body closure, okay? And then as you can see, we continue with bearish structure. Okay, so in this example, we have bullish structure, right? And you wait for now a body closing below this low. Is this a market structure shift, guys?
I want to say no. I want to say no.
No, it is not, right? Is this a market structure shift?
Yes, because the body drops below the mark. Wait.
We get a body closing below this recent swing low.
Okay, so yeah, it does depend on the body. So the body has to close up. Because there's just this, but it doesn't hit the exact bottom, and it doesn't have a body. It just has a wick.
This is a market structure shift. I hope you guys are seeing this. Start marking out on your charts. That's going to be your homework for today. Mark out your market structure shifts, mark out trends, try to identify a bearish trend versus a bullish trend, and try to identify when the trend is changing. And then once we get this closure, we also create this bearish fair value gap. We get a turtle sweep at these highs, then we get a CRT. No, I'm just kidding.
Once you guys get a little bit more advanced and know all these ICT concepts, you'll be able to find stuff like this. Nice little low resistance liquidity resting down here. You're going to have a sweep of this buy side liquidity up here. And then you're going to come down, tap into this fair value gap after the market structure shift and get this beautiful
ICT
short to the
2022
downside.
model.
All right, guys, now a quick little refresher before we let you go. All the way to the left here, you have the bearish structure. Right next to it, you have the bullish structure. Right next to this, we got the bullish market structure shift. We start with a downtrend in price, and then we break through this high, which creates a market structure shift.
Can you take a screenshot of this? Oh, okay. Alright, we're gonna end off right here until I come back. I'm just gonna click screenshot.